Where can advisors get equity-like returns while taking high-quality bond risks? Hi, I'm Paul Malloy. Today, we'll explore what parts of the municipal bond market are offering the most compelling value, how advisors should respond to signals from a steepening yield curve, and where they might find attractive entry points in tax-exempt bonds. So the real story of the muni market this year has been really the tale of two markets. You've got the front end of the market, which is trading at 60% of treasuries. Using the top marginal tax rates, the front end of the municipal market has been historically tight for some time. It's gotten pushed to an even tighter point, mainly driven by SMA flows, where you get a lot of indiscriminate buying across the high quality part of the front end of the curve. And then you've got the long end of the municipal curve, which is trading at 95% of treasuries. Additionally, SMAs aren't terribly present in the long end of the municipal curve. And that's one of the reasons why the long end of the municipal curve has been so cheap, is you've had lack of demand with an overwhelming amount of supply that was due to a lot of, one, COVID relief funding rolling off and issuers needing to issue more bonds. And we had a period of uncertainty over the summer around tax policy. With a lot of those uncertainties now cleared, we think now is a great time to start getting back into the long end of the municipal market and taking advantage of these historically cheap levels. One of the great things about the long end at 95% is it gives a backstop for institutional investors. So the fact that you've got an institutional buyer backstop, we think we've really hit the peak level that municipal tax-exempt securities can get relative to treasury bonds in the long end. We've been saying for a while now that bonds are back. And as we look at what bonds are back means, that also means that income is back. And in the municipal market, the exemption comes on the income and the income alone. So that is what is really important for us to think about when looking at the opportunities and the value in the municipal market. As we look at the shape of the municipal curve, you get a lot more yield in the long end of the municipal curve than you do the front end. And that coincides nicely with the fact that you need time in the municipal market to really generate that tax-exempt income. We are focusing on high-quality municipals in the long end, and we're focusing on underweighting high-quality municipals in the front end. We're replacing that front-end high-quality municipal exposure with BBB and lower-quality municipals where we're getting that additional carry in the front end. So a credit position in the front end and high quality in the long end is where we see tremendous value in the municipal market currently. Be sure to like this video and subscribe to this channel for more insights from Vanguard's thought leaders.